The profit and loss account and balance sheet of a company for 2 years 1 and 2 are given below. Assume a tax rate, they are given the 30% for the year 2. They ask you to calculate the for year 2. Next, they are given the particular amounts. Net sales for the first year 30,000, for the second year 35,000. Income for marketable securities for the first year 600, for the second year 1,000. Non-operating incomes, they are given the 400 for the first year, second year 800. Total income 31,000, 36,800. Cost of goods sold, they are given the 18,000 and the 21,000 for the second year. Selling and administrative expenses 3,800 and 4,600. Depreciation 1,900 and 2,200. Interest expenses 1,700 and 1,600. Total cost and expenses, they are given the 25,400, 29,400. The next, they are given the profit before tax 5,600, 7,400. Tax provision, they are given the 1,400, 1,900. Profit after tax 4,200, 5,500. Dividends 1,200, 1,400. Next, retained earning 3,000, 4,100. Balance sheet, they are given in the millions. Liabilities for the first year, second years. Equity capital 5,000, 5,000 they are given for the 2 years. Reserves and surplus 5,000 and 9,100. Debit 15,000 and 14,900. Total is 25,000 and 29,000. Next, they are given the assets. For the first year's fixed asset 15,000, second year the 18,500. Investment, marketable securities 5,000 and 6,500. Net current asset 5,000 and 4,000. Total the current asset is 25,000. Total the assets is 25,000 for the first year, 29,000 for the second year. They asked here all of this represent excess marketable securities. What is EBIT for the year 2? What is tax on EBIT for the year 2? What is net investment for year 2? What is free cash flow to the firm for the year 2? What is the return on invested capital for the year 2? Here they are given the year 1 and year 2 of the company's net profit and loss. They asked for the earning before interest tax for the second year. For the second year means this one. For the second year we have to be calculate. So next we have to be calculate after the EBIT, tax on EBIT. What will be the tax on EBIT for the second year, for this second year? So the next one is, what is the net investment for the year 2? Same, the next year 2 want to be calculated. Next, what is the free cash flow for to the firm of the year 2? Same for the year 2 we have to be calculated. Next, return on invested capital for the year 2. For next, return on investors we should be calculated on the year 2. So let me start the sum of the solution. So they are given here net sales. What is the, how to calculate the EBIT before? Let me start first one. What is EBIT? Earning before tax. How do we calculate earning before tax? Means first we have to be take the calculation of EBIT. So let me take first particular and amount. In the first particular, in the EBIT, first we have to be take the net sales. Net sales. Here, what they are given the net sales for the second year, we are calculating for the second year. No, so we have to take the second year net sales. Net sales is 35,000. So we are taking the 35,000. So the next, after the net sales in the EBIT, we should be less the operating costs. What are the operating costs? Here they are given the selling and administrative expenses, depreciation, interest expenses. These are all the operating costs. What is the selling and administrative expenses for the second year? Here the 4,600. So first let me take the cost of goods sold. So cost of goods less or minus less operating cost. What are the operating costs? I said cost of goods sold. Cost of goods sold, how many given there? 21,000 for the second year. 21,000. So the next they are given the depreciations. Sorry, selling and administrative expenses. Selling and administrative expenses. So I am writing in the short form. So 4,600 is the second year. Next we are adding the depreciation for the second year. Depreciation for the second year is 2,200. So let me add these three amount. So what will become the three amounts? So we are adding the 21,000 plus 4,600 plus 2,200. These are the operating cost in the EBIT. So we are getting the 27,800. So we have to less. No, so we are lessing this one. Lessing means we have to take the bracket. So in the net profit 35,000 minus 27,800, the answer will be the 7,200. The 7,200 is the operating profit. Operating profit, or we call as EBIT. So we have calculated the EBIT. So we got the EBIT now. So what they asked for the next? What is tax on EBIT for the year 2? They asked for the year 2 the EBIT tax. So let me calculating the calculation of tax on EBIT. So we are calculating the EBIT tax. So like we are taking first one as a particular, same as it is, and the amount. For tax, what we are taking? First we are taking the, here what are the taxes they are paying. So the taxes here, the taxes they are paying is tax provision for the 1,900 for the second year. Tax provision from the income statement. You are taking from the income statement? No. So that is the from income statement. We are taking the tax provision as 1,900 is a second years. We are calculating for the second year. No? So we are taking this 9,900. So the next one we should be less it. So we should less the tax on non-operating income, which the incomes is getting, that will be the less for the taxes. Taxes we should be less for the non-operating income. Which income is getting, no, that should be less the taxes. What are the non-operating taxes? Non-operating income taxes. Non-operating income taxes are the 1,000 rupees for the second year, and the non-operating income is 800. So we should be add this 1,000 plus 800. So we are putting the tax. Now what they are given the tax rate? 30%. So into 30%. So what will be the answer? 1,000 plus 800 is equals to 1,800 into 30% into 30% is equals to 540 will be the answer. So next we should be add it. What should be we add? Tax on non-operating expenses. Here we should be add the expenses. We should less the income. So what are the non-operating expenses? Here they given the non-operating expenses is 1,600 for the year 2. 1,600 into the tax is 30%. So 1,600 into 30% is an 480. So let me add the sum. So 1,900 plus 540. Sorry, 1,900 we should add less, no, 1,900 income we should less than income 540. So next plus 480. The answer will be the 1,840. So the total tax on EBIT will be the 1,840. This is the lessing, no, so we are putting the bracket. So we got the total tax on EBIT. So the tax calculation on tax on EBIT we have calculated. So next day what they asked? They asked here, what is the net investment for the year 2? Net investment. How to calculate the net investment? Net investment to calculate. So third one we are calculating. Calculation of net investment. So same as it is particular and amount. In the particular column, so we are taking the first one as so here the given the liabilities. What is the liabilities here? First one they are given the equity. Equity, this is the net investments. Equity capital. Equity capital for the second year is 5,000. So equity capital for the first second year is 5,000. These are the net investment. Next, reserves and surpluses for the 9,100 second year. Reserve and surplus is 9,100. Next, debit. Debit they are given the 14,900. So if we add these three, what we'll get? 5,000 plus 9,100 plus 14,900. So we are getting the 29,000. So this will be the